Willem Middelkoop, founder of the Commodity Discovery Fund and author of the book, The Big Reset, The War on Gold, and the Financial Endgame. I am beyond excited to have you on the show, especially given all the events that have transpired and continue to transpire here in the US. It is so great to have you, Willem. Thank you so much for joining me.
Yes, thanks for the invitation. And sorry I had to cancel a few times. COVID, we had some other disturbances, but now it's very timely enough to discuss today.
Very timely indeed. Well, let's start with your reaction to the events that have unfolded, continue to unfold surrounding Silicon Valley Bank, the intervention that we've seen there specifically for the depositors, and also Signature Bank, and just more broadly, banking here in the United States under pressure today. Would love to just kind of start with your big picture reaction.
Yeah, well, the last interview I did, that was, I think, 10 days ago, or 1 week ago, 10 days ago. And then I said, we can wait for the next thing to go wrong, because we've been in this environment in which the Federal Reserve is raising rates rapidly from a very low point. And I've experienced that before. That was just before the start of the great financial crisis, when the Federal Reserve also cracked up rates from, I think, 1% to over 5% in 17 steps over a period of 2 years. And that led to the great financial crisis. And now we've seen a record pace of jacking up the interest rates in the US by the Federal Reserve. And you always know that somewhere in the financial systems, at a certain point, things start to break, because the financial system is rather unstable because of the huge burden of debt. And you can't raise rates like the Fed has done without any repercussions of any damage done somewhere.
Yeah. So do you think, as it relates to the Fed, it looks like, I mean, I would love to just hear your thoughts on like the rate outlook, especially with the meeting coming up. What do you expect there?
Well, the Fed is really cornered now. Central bankers were cornered already. That's something I've discussed in many interviews, and now we see why they are cornered and what it means. If you look at the views of the average market participant, last week, they were thinking that the Fed would raise again for 50 or 25 base point. But now, after what all happened over the weekend, the general consensus is that they stop raising, or they might even start to lower rates. But of course, why were they raising rates in a record pace? So it had to do, of course, with inflation. Well, has the inflation disappeared? No, it hasn't. By raising rates, they really did a lot of harm to the economy and also to the financial system, as we know now. And if they stop raising rates, they stop their fight against inflation. And it's a big question now, whether they should stop raising rates, but then maybe inflation goes into a higher gear again, or if they should continue raising rates and then the stress within the financial system becomes much larger. So they really, I wouldn't like to have their position.
Yeah, I would not like to be in their position, like backed into a corner, as you put it. That's an interesting point too to bring up, because yeah, it does raise the question, by stepping in here on this crisis, are we eclipsing another crisis, which is inflation? Like, how do you begin to like even assess the two, or like, what do you think they made the right move here, or do you think this could only like set us up for more pain down the line?
Since the beginning of this year, I'm quite active on Twitter, but since the beginning of the year, I also started a Patreon page in which I elaborate a bit more about my thoughts. And I've been posting there that this is all very inflationary, what's happening now. If you start to raise the limits in which the deposits are guaranteed, and that has been raised now from 250K to unlimited, you take the risk that people start to speculate more, and that there's a real risk that the inflation might not be contained yet. And if we look what's happening now, I expected, I wrote last night before we had this news how this rescue operation would work out in detail. I published a post expecting that the assets which don't have any counterparty risk, like gold, silver, and Bitcoin, would all start to rise from today, and this is exactly what happened. So if gold goes up, silver goes up, Bitcoin goes up, these are inflationary signs, and that's something which is very risky because we come from an environment with too much inflation. So it's really worrisome.
Yeah, I want to talk about that too, because I definitely want to bring up gold. And you also brought up Bitcoin as well. And I guess like the question too is, could it also, because you're mentioning it's a sign of inflation, could it also be a sign that maybe that this really didn't shore up confidence in the banking system? What do you think about that? Do you think that these actions can help with confidence, or do you think that I don't know, you think more people will like seek assets like gold or even Bitcoin?
Well, last week, of course, many of the smaller regional banks were really losing trust because they were especially hit hard by the rising interest rate environment. And speculators, of course, took advantage and started to short these stocks. And when, you know, we have a system which is built on trust, and as long as people trust their banks and trust the economy, we're all fine and we all can make money. But as soon as there's distrust coming, especially from savers, on the quality of the banks, you can have a bank run developing very quickly, especially in this digital age. And that's exactly what happened last week. And once a few banks got contaminated and there's too much doubt about their strength, it's very easy to have, well, a run on many banks. So I understood why the Federal Reserve and the FDIC and the Treasury took this decision, but to guarantee all deposits, that's a decision you can only do once, and it shows the desperation of the regulators. And of course, this brings back trust. It brings back trust into the system, but like I said, it's a decision you can only take once, and I can't see how they can move back from a decision like this. So like the presenter on CNBC this morning said, actually this could be seen as a nationalization of the US financial system, because the government guarantees all deposits in the US financial system, and this has never happened before. So this is really history in the making.
Yeah. How do you think about, like, maybe, I don't know if it's too early, but how do you think about some of the consequences of that?
Yeah, like I said in a previous answer, it's not hard to understand what the consequences will be, because people will understand that what happened now in the US with the US banks, and now all deposits needed to be guaranteed. There's something really wrong within the US financial system. And actually, on Twitter, I said this is clearly part of an end game, because this is you can only do this once, and you only will do this as a regulator when you're looking into their biz, and everything starts. You're afraid everything starts to tumble down. And today on the markets, we already see the reactions. The dollar is lower because once the Federal Reserve can't raise rates anymore, there's pressure on the dollar. And of course, there's pressure on the dollar because this is not a show. It doesn't show any strength in the US economy or the US banking system. And like I said, people like me, the smart money, they will start to buy all without counterparty risk, or all the government can't print, because in the end, this could well be seen as the start of QE again.
Yeah, the start of QE again. You mentioned, and I'm glad you brought it up too, that there's like signs of pointing to the end game. And I know this is something you wrote about in your book, The Big Reset. Can you kind of frame up and help share a bit of your thesis on the Big Reset, the end game, and how these recent events might tie into your thesis or reinforce some of the ideas that you have written about over the years?
Yeah, in my first book, which I published in 2007, was only published in Dutch, I was warning for a coming crisis in the international monetary system, especially in the US financial system, because the system looked very fragile and unstable to me. Well, then we got the Lehman crisis, happened within 12 months after my book came out. And people started to ask me how could we solve this crisis, the great financial crisis. I never had a great answer to that question. I started to study the system more and more, started to study central bankers more and more, and the history of central banking. And then I became aware that in the past, we used to settle huge waves of instability in the monetary system by doing monetary resets. We had one in 1944, when the dollar became the anchor for the international monetary system. And I started to write about this thesis that we could have a monetary reset again, in which we would see the end of the dollar as the anchor for world's financial system. So we need to find a successor for the dollar. We needed to have debt restructurings because we have a mountain of debt, a house of cards of debt. And I thought we also would need to have a dollar devaluation at a certain point. And a dollar devaluation means a gold revaluation that has also served as well in the 1930s. And actually, well, this was the thesis of the Big Reset. It was published in 2014. I revised it in 2016, added a full chapter, 50 pages, on the new cooperation between China and Russia, who had a common view about the end of the current dollar system. So they were working together to speed up that process. And actually, I think now, at the back cover of the Big Reset, I wrote that around 2020, large changes would be needed within the system. I think we reached that point now, especially after the COVID crisis. We saw an incredible amount of money being printed. there was a very strong reaction in consumer prices. So the inflation and now the Ukraine war, which even made this inflation even higher because of the energy situation. So now we reached a point where the stress in the financial system really gets very large. And we're close to a point where big steps need to be taken to stabilize the system. And then you enter what I call monetary reset.
Yeah. When you mentioned
And that's the undertitle, sorry, but the undertitle of the big reset was the war on gold and the financial endgame. And financial endgame, I don't mean with that line that everything will come crashing down and we will start bartering and everything will close down. But what I mean with the financial endgame is the endgame of the current dollar system, where the stress within especially the US will become so large that we'll need a dollar devaluation, we need debt restructurings. But I was hoping that we could do those steps within a world where East and West were rather friendly towards each other. But since the start of the Ukraine war, we have this great divide now between the West and the rest of the world. And then it will become very hard to come up with solutions which are acceptable to everybody and which don't cause too much pain. So I'm afraid that the conflict between the West and the rest of the world will make it very difficult to reach a monetary reset needed.
Yeah. Is that you put out a tweet earlier today, and maybe you can explain it too, because is that the tweet you put out that said a new financial crisis, an existential clash between the West and the rest, add climate, refugees, inflation, and some other crises, enjoy the ride, ...
Yeah. So now we have this new financial crisis. Actually, since the great financial crisis in 2007, problems really weren't solved. We just added a few layers of debt while we had a debt crisis in 2007 and 2008. So the whole structure became even more unstable. Well, now we seem to have the start of a new financial crisis. And this conflict between the West and the rest of the world, don't forget that over 140 countries don't join the West in sanctions against Russia. And only 1.5 billion people live in countries who are, allies of the US, who have installed sanctions. But there are over 6 billion people living in those 140 countries who take a more neutral stand. And the US is very aware that most of the world is not a friend anymore. So when the US gets, I made a little joke on Twitter. I said, wasn't it supposed to be that the Russian banks would collapse? And now we see the US banks collapsing again. So it shows the West, and especially the US, is not that strong as we often presume they are.
Mm-hmm. What do you think, if it shows that the US is not as strong, what do you think about the broader global implications? Like, do you think this leads to like more like, I think in the book you wrote about a Minsky moment, but could this kind of tee us up for one of those?
Well, what happened now in the US, where they have to guarantee all deposits, that's an act you undertake to avoid a Minsky moment. A Minsky moment is that investors are trying to sell everything because they don't trust anything anymore. But well, that's almost what happened among the US banks. So if people don't trust the banks anymore, start to move money and take money out, the whole house of cards can be tumbling down in a matter of a few days or a few weeks. And actually, I think that was the reason why the Federal Reserve was taking this move overnight together with the US Treasury and the FDIC to guarantee all deposits. And as I said, that's a move you only can take once, and it shows the desperation.
Yeah. Let's talk about, I guess, maybe opportunities, because you mentioned precious metals, you mentioned Bitcoin. Can you share a bit more of your thesis? And I would just love to hear your thoughts. Maybe let's start with precious metals. Let's start with gold. Let's start with silver. Love to hear your thoughts there.
Yeah, to understand that a bit more, we should look to our financial system. So the current financial system was born in 1944 at Bretton Woods. It's centered around the dollar. First, the dollar was as good as gold. So the United States promised other countries they could always trade their surplus dollars for physical gold. Many countries in Europe were exchanging surplus dollars for physical gold in the 1960s. That's why the US lost more than half of its physical gold holdings. And then in 1971, we had this famous decision by President Nixon to take the dollar off the gold standard. And that's where we now. So we've now been living for 50 years in a situation, in a system which is built on paper assets, which is centered around the US dollar and centered around treasuries. The US has a national debt now of over 31 trillion. And the question is, what will the other side of the world, so what will the BRICS alliance, Brazil, Russia, India, China, South Africa, what are they planning to do? Because as I explained, they have a growing list of supporters, countries joining them, and they might be on the verge of introducing their own system, like the US has introduced their system in 1944. And we have seen a few interesting publications, especially from Zoltan Pozsar, who's a strategist at Credit Suisse. And Zoltan Pozsar has warned that the current developments after the start of the Ukraine war point towards the start of a new monetary system. He calls it Bretton Woods 3.0. And he warns that this new monetary system coming from the East will be centered around gold and other commodities. And he's warning that we're moving away from a system which is a paper system centered around the US dollar and US treasuries, and we're moving away to this new system centered around gold and commodities. So we're moving away from paper assets toward hard assets. And what I was advise investors, and that's what we do with our commodity discovery fund ourselves, we try to invest as much of our paper assets into physical assets, into companies who own all these resources underground in precious metals, in the battery metals, in uranium space. And that used to be a very contrarian strategy, and we started quite small in 2008, but now we see more and more institutional investors moving into hard asset space as well, including some of the pension funds.
Yeah. You mentioned it used to be a contrarian strategy. What does that signal to you when that feels like it's no longer contrarian?
Well, it tells me that we were smart and we were early. But it also worries me because there's no problem when 1 or 2% of the smart money is moving out of a current system. But when too much money is starting to flee, we've seen that with the banks, then it's hard to stop. And when investors start to move away from paper assets to hard assets, to all the government can't print, you're walking on the road towards hyperinflation, because we've seen this happening in the past. There are enough examples when a paper system collapses, when trust in the paper system disappears, people start to move to all things tangible, and this is starting to happen, one could say. And what happened over the weekend and overnight is a very strong indication that we're moving to the next phase in this process.
Yeah. I don't know if you have, I'm looking at gold right now, and it's up 2.3% right now. Do you have, and it's above 1910. Do you have a price in mind, or do you think about like where you see gold headed, like how much of a run you could see? I don't know if you do, or you think about that like potential of where gold could be. Do you?
Yeah, and if you look at silver, I was advising my Patreon readers to look at silver, because silver is damn cheap, and silver is up 6% now. So that's a very strong move. From a technical point of view, we're seeing the end of a correction which took over 2 years. We had a huge run after the COVID crisis for gold and silver, and that ended late 2020. We've been in a correction ever since, and this move seems like the start of the next wave up, and the next wave up can bring us to new all-time highs. We've seen gold reaching a top around 2000 a few times over the last few years. In the next move, we could be at the start of that move, but in the next move up, I expect gold to cross 2000 and to set new all-time highs, then have a correction in which the 2000 becomes support instead of resistance. And then we could see a rapid move towards 2,500, 3,000. And I expect even more fireworks for silver, because silver is trading at less than 50% of its 1980 high. So over 40 years later, it's trading 50% lower, and silver has much more room to grow.
Why does silver have more room? What is it about silver? Just curious.
Well, silver is a monetary metal, just like gold. I'm old enough to have had silver coins in my pocket just to pay the groceries. You're young enough to haven't had that experience, but I know a guy. He was owner of a few malls, and in the 80s he collected all the silver coins and kept them apart, and all the non-silver coins he brought to the bank, and now he has a huge collection of, well, thousands and thousands of these silver coins, which are much more valuable. So silver is a monetary metal, just like gold, can be used as money, has been used as money time and again, and people often don't forget that. So that makes silver poor man's gold. And that makes silver a very interesting place where you can hedge your paper assets.
Yeah, and also as we're recording this Monday morning here in the U.S., it's morning here. Bitcoin is also just ripping higher. It's up. I'm looking at up over 18% today. Do you think this could be a catalyst for a new like bull run in Bitcoin? Do you own Bitcoin? Do you like, I heard you mention Bitcoin earlier. So just, what are your thoughts there?
Yeah, well, I can read what I wrote last night on the Patreon platform. I said how to hedge and hide. I wouldn't be surprised to see much more money flowing towards assets without counterparty risks. Precious metals and Bitcoin might benefit in the coming weeks and months. And especially silver looks very attractive at current levels. So for me, Bitcoin has been digital gold since 2014. I mentioned in one of my books in 2014 that Bitcoin is digital gold. And that's the reason why I've been adding it to my own portfolio as well. And I often use a very simple model to put 25% of your net worth in real estate, 25% in equities, 25% in physical gold and silver, and then 25% in cash/Bitcoin. And by using this portfolio, you are pretty well hedged against almost all of the risks which can occur in the financial system. It's a hedge against inflation or hyperinflation or even a deflationary collapse, or when banks close or stock exchanges close, you always keep the best part of your net worth. It will always survive. So I think Bitcoin fits in wonderful in a broader portfolio, but don't put all your money in crypto.
Yeah, I think that's a good lesson. And Willem, I want to be so mindful of your time, and I'm so grateful for you taking the time on this extremely busy Monday. I want to give you a couple minutes because you kept on mentioning Patreon. I would love for you to share where folks could follow you on social media, maybe learn more about your firm or your writings, also your book. And if you have any parting thoughts for the folks, things that we did not bring up in this conversation, any parting words, please take a moment to share those as well.
I always like to share a small gift, and I decided a few years ago to publish the full manuscript of the Big Reset for free on our website. So maybe you can include that in the show notes, or people can Google just the Big Reset download. People can follow me on Twitter. I'm easy to be found there. And like mentioned, I have an active Patreon account now as well.
Yes. And if you have any parting thoughts for the folks?
Well, we again reach the point where the stress within the system becomes clearly visible. We have a lot of moving parts. I think we entered a new phase, as said before, and it's very hard to analyze within the first 24, 80, or 48 hours what will happen next. But on average, I think we made quite clear that I hedge myself by going to assets without any counterparty risks. Banks are huge counterparty risk if you have your assets there. So I always advise people to don't have to limit their exposure to bank deposits, and what has happened in the last week proves that point. And it's a time to become vigilant and to become conservative. But when we get a large move towards all assets which can't be printed by governments, it wouldn't surprise me when you could see a huge rally also in stocks again, in the stock market again, because stocks in companies the government can't print. And we know from other periods of superinflation or hyperinflation that stocks rise. The Turkish stock exchange was up 80% last year, not because it's going well in Turkey, because of the inflation. So stocks are a good hedge, just like gold, silver, Bitcoin, real estate. So you need a mix.
Yeah. Well, Willem Middelkoop, founder of Commodity Discovery Fund and author of The Big Reset, The War on Gold, and The Financial Endgame. Thank you so much for being so generous with your time and your ideas. Really appreciate you coming on. Thank you, Willem.
My pleasure.
Hey everyone, I really hope you enjoyed that video. Be sure to hit that like button, the subscribe, and that bell so you won't miss any new videos.